Okay, we move on now to interest income, still under section 4C. So what is actually interest income? Interest income is actually amount of income that you receive due to compensation for delayed payment, meaning that you taken up a loan and then you taken up a loan now, but then you pay the whole amount, whether regardless whether in installment basis or lump sum basis, which you pay later together with extra money there. So the extra portion is actually considered as a interest income. Okay, so it's defined based on the case law as a compensation for delayed payment. Right. So again, as I mentioned earlier on, interest income can also be treated as a business income. Alright, if let's say it's become part of your principal activity of your business entity, for instance, like banking industry. Okay, derivation of the interest income is actually depends on the source of the income, where does it derive from? Okay, because it can be derived in Malaysia or it can be received in Malaysia from outside Malaysia, especially for specialized industry. For instance, like banking. Banking is also part of the specialized industry. Okay, so if you refer to the textbook para 3.1, okay, so because sometimes when people taken up the loan might be invested, okay, regardless whether it can be in the working capital or whether it being invested into an asset. So normally we will see whether the working capital is actually used for the business in Malaysia, or we purchase an asset and that asset is actually used in the production of income in Malaysia. Therefore, it's actually deemed to be derived in Malaysia. Okay, so we are talking about the derivation of the interest income, which is in association to the where the money or the principal portion is actually being used. Okay, so that's how we determine the derivation of interest income. All right. Okay, the next one is deductions of expenses. Again, we follow the section 33, which is if it is wholly and exclusively incurred in the production of the interest income, therefore it can be deducted as long as it is not prohibited by section 39. Okay, because section 39 is talking about expenses that cannot be deducted against a specific income. Okay, for the basis of assessment, so meaning basis here, again the same rule apply. Okay, for individual we follow calendar year, and then for business we follow financial year. Okay, in the case of individual taxpayer, most of the time when would you receive interest income? Okay, so most of the time, of course, from Islamic point of view, we don't call it interest income, we call it hibah, or what's this? Profit rate. Okay, so most of the time when you receive by nature interest income is actually exempted. So what are the things that actually being exempted under interest income category? So this one you need to refer to exemption, the list of the exemption of interest income, which is starting page 174 until 175. Alright, so when you go through that para 6.0 talking about exemption, starting from para 35 of schedule 6. Okay, so here they mention about interest income that you receive from securities or bond issued by government. Okay, because sometimes you buy certain bonds issued by the government, guaranteed, or debentures or sukuk, okay, or whatever by nature the bond issued by the government or by the bank negara. So most of the time the interest income that you receive will be exempted. So in the computation you have to show the word exempted there. And then other than that, if you see para 6.2, okay, what else other interest income that normally will be exempted for individual? You can see there whatever interest income that you receive from money deposited into the following institution. What kind of institution? Whatever institution, banking institution or finance institution under the list of BAFIA, Banking and Financial Institution Act 1989. So who are these? banking or finance company, this is actually all banks. Okay, all bank or financial institution is actually governed by BAFIA. Okay, and also Islamic Bank, which is governed by Islamic Banking Act 1983. So if you see the list of here, basically whichever bank that you put your money there, most of the time the interest income that you receive will be exempted. Okay, Development Bank, Tabung Haji, okay, Lembaga Tabung Haji, Malaysian Building Society Berhad Cooperative, okay, Borneo Housing Berhad. So in general, because all the banks are governed in Malaysia, all governed by central bank and also governed by certain specific act. So in general, whatever money that you put in any of the bank in Malaysia, most of the time interest income that you earn from that money that you deposited will be exempted. Okay, and then you can see further, they also mention about para 35 capital A schedule 6, also talking about bank license under Financial Services Act. Okay, and then also mention further about 8.0 premium savings certificate. If you are familiar with the BSN, Bank Simpanan National, where you have all these withdraw or premium savings certificates, this is also exempted. And then 9.0 talking about bonds and security issued by Penerusan Dana Harta National Berhad PNB. Okay, also will be exempted. 10.0 if you put your money in the bonds, okay, by companies listed in Nasdaq. Alright, and then if you move on further, 11.0 talking about bond, also Merdeka bond. Alright, so all this, if you read through everything on page 172 and 174, this is all talking about interest income that normally will be exempted. Okay, so in general, the simplified one, okay, to simplify the description of interest income, most of the time when you will get your interest income, normally when you deposited your money into a particular bank. So most of the time, all the banks in Malaysia are governed by certain specific act, and in general, under exemption order, all these banks are actually exempted. Okay, so that's why in exam you don't have to worry. If you have interest income, most of the time you just have to put interest income exempted. Okay, so that is with regard to interest income. Okay, let's move on to rental income. So rental income is actually under section 4D. Alright, section 4D is talking about rental income. So what is the definition of rental income? Okay, definition of rental income is actually referred to sum paid for occupation of any premises or hiring of anything. Okay, why occupation? Because sometimes you might be occupied any premises, which is talking about derivation of the rental. You would have two categories of properties. One is movable properties, another one is immovable properties. Movable properties, normally you can move around the property. Okay, for instance, like tractor, machine. Okay, because meaning that this machine can actually move from one side to another side, or perhaps this machine also can move from inside Malaysia to outside Malaysia. Okay, and you also have immovable properties. What are immovable properties? That means properties that cannot move, such as land. Okay, or such as a condominium, bungalow, house, and so on. Alright, so that's why this would actually determine where is the derivation of the rental income. Alright, so that's why here they mention about occupation of any premises, because when you occupy a land, or when you occupy the premises like bungalow, accommodation, or condo whatsoever, that means you occupied the premises. Therefore, you pay a certain amount of money for staying in that premises, or you hire something, so you pay certain rental amount. Okay, so of course, on the landlord or the owner of the properties, you will receive income. So that income is actually known as rental income. Okay. Okay, so that is the definition of rental income. Okay, how do we know that rental income is actually derived in Malaysia? Okay, that is actually derived in Malaysia. Okay, if you refer to para 3.2.1, it's actually refer to rental income which is received by lessor carries on business in Malaysia. Okay, carry on business in Malaysia. So for instance, you have lorry, okay, or you have tractor, and then another construction company is actually borrowing your tractor, and they pay you a certain amount of rental, okay, for using that particular tractor. So, and then your business is actually inside Malaysia. You do your construction or you use that tractor in your construction site inside Malaysia. Therefore, that because you is actually resident, isn't it? Okay, you are tax resident in Malaysia. So whatever rent income that you receive is actually considered as a rental income that received in or derived in Malaysia. Okay, because for instance, you might have using certain machine which is used in Malaysia, alright, but then you pay to the owner of the business could be outside Malaysia. Okay, so if you refer to at 3.2.2, okay, rental income received by foreign lessor may be subjected to withholding tax. Okay, what does it mean? It means that, for instance, if you can recall the smart tunnel, okay, the smart tunnel, or let's say MRT, the underground MRT track, okay. So in order to dig that track or the underground track, okay, you cannot just simply go and dig, okay, using human, which is it will take some time on. So what they do, they actually borrow the machine, and this machine is actually owned by foreigners, okay, owned by foreigners. So since the machine or the digger is actually owned by foreigners, so the machine is actually being carried into Malaysia, and they use that on the construction site in Malaysia. So when they want to pay the rental, it is actually paid to the foreign company. Okay, so foreign company is actually earning a rental income because we use that machine in Malaysia. Alright, so since we use that machine in Malaysia and we pay rental to foreign company, so that foreign company is actually earning a rental income in Malaysia. Therefore, in this case, of course, that amount of portion or amount of rent income that received by the owner is actually taxable in Malaysia. But because you're a foreigner, therefore we take certain portion of tax from that amount when you make the payment, which is we call it withholding tax. Okay. So in other words, as long as whenever you you lend or you borrow a machine, and that machine is actually used in carrying a business in Malaysia, therefore, whenever you pay that rental to, could be a Malaysian company, or it could be a Malaysian individual, or it could also be foreign company or foreign individual, whoever the person that received that is treated as a rental income. Okay, so therefore is deemed to be derived in Malaysia. Okay, then I just would like to highlight with regard to the rental income which can be treated as business income. Okay, so if we refer to para 1.1, PR is actually public ruling. So public ruling 12 number 12/2018 has actually come up with a specification or criteria that mention when the rental income will be treated as rental income under section 4D, or when the rental income will be treated as a business income, therefore classified as business income. Okay, of course, if you have many assets or many properties, you would actually prefer for your rental income to be treated as business income because you enjoy more incentive and benefits. Okay, so in general, how do you know that rental income will be treated as a business income? Number one, when you provide properties, you also provide maintenance services or you also provide support services. Okay, so let's say repairs, maintenance, when you lend over your crane machine or when you lend over your tractor, if anything break down and so on, normally you are the one that have to repair it. Okay, so in that case, then you can claim that whatever your rental income that you generated from that activity will be treated as a business income. So this actually applicable to any kind of properties, movable properties or immovable properties. Okay, so if you want to know further for tax planning purposes, okay, you can actually go and read Public Ruling 12/2018. Okay, so let's move on. Okay, basis period. Okay, basis period or basis year. How do we know that rental income that we receive will be taxed in which year of assessment? Okay, so of course, as an individual, if you receive rental income, it actually depends on what rental income that you receive within calendar year, what rental income that you receive within financial year for business or corporate taxpayer. Okay, so in general, if let's say I own two condominiums, okay, so every month I receive a rental amount from my tenant, okay, for that two condominiums, therefore that monthly rental definitely will be treated as my rental income for that particular month. Okay, so within that calendar year, I have to know normally in calendar you have 12 months, right? So how many months do I receive my rental income? So let's say during that year, all my premises are occupied by tenant. So basically, I would actually would receive rental income for the full 12 months. Okay, because in certain year you might have received less than 12 because people move in and out from your properties. Okay, so there are possibility that happen. So in general, whatever monthly rental that you receive will be treated as a rental income and accessible to tax in the year of receipt. Okay, that means if you receive in that year, therefore it will be taxed during that year. Okay, sometimes people tend to pay advance rental. Okay, advance rental meaning that they plan to stay in that house for 2 years. So beginning of the stay, they have a lot of money, so they don't want to pay on monthly basis. It's tedious. So what they do, they counted that if let's say 1 month the rental value is 1,000 and they are going to stay there for 2 years, which is equivalent to 24 months. So 24 months multiplied by 1,000, the whole amount of rental income that they need to pay is actually 24,000. Okay, so what happens is that let's say they want to move in July 2020 and they plan to stay for 2 years. So they want to pay in advance the whole 24 months in July 2020. So in July 2020, the moment they move into your condominium, they pay you 24,000. So this 24,000 when it will be taxed. Okay, because this 24,000 is actually covered to 24 months, which is 2 years. Okay, so since you received that 24,000 in July 2020, therefore income tax has already mentioned that the amount of advance rental will be accessible to tax in the year of receipt. So since you received 24,000 in July 2020, therefore the whole 24,000 will be taxed in YA 2020. Okay, in the year that it is received. So it's not going to be prorated over 24 months. Okay, so that is with regard to advance rental. Okay, the next one is deposit. Okay, deposit. If you are familiar with the renting of a house, normally your landlord would actually say 2 plus 1, 3 plus 1 or whatever. Okay, so meaning that before you move in, you have to pay 2 months deposit or 3 months deposit plus 1 month, the first month that you stay inside the house, or 2 plus 2 or the first 2 months that you stay inside the house. Okay, so If let's say you plan to move in into a condominium in July 2020. So your landlord already said, okay, in order to move in July 2020, you have to pay 2 plus 1. So meaning 2 months of deposit plus 1 month for July that you are going to stay. So you pay early of the month before you stay. So that's normally how you pay for your rental. Before you stay, beginning of the month, you already pay for that particular month. Alright. So that means before you move in, you plan to move in July. Therefore, in June, you already pay. Okay, your 2 plus 1, meaning that equivalent to 3 months rental. So since you receive in July equivalent to 3 months, how much will be accessible to tax? Okay, for the purpose of tax computation, only 1 month will be accessible to tax. Okay, the one that monthly rental, only that portion will be accessible to tax in July 2020. What about the 2 months? Okay, the 2 months deposit is not taxable. Okay, the 2 months deposit are not taxable. Why? Because by nature, this deposit is actually refundable. Okay, so meaning for certain tenant, what happens is that every month they pay. Okay, so if they know that you're going to stay until end of the, let's say, until end of the December 2021. So in December 2021 also they pay their monthly rental as usual. So that's why normally before they move out, the landlord would actually return back their 2 months deposit. Okay, so in that case, that deposit will not be accessible to tax. Okay, when your deposit, a refundable deposit, can be accessible to tax. Okay, when the refundable deposit can be accessible to tax the moment it is actually being converted into monthly rental. Okay, the refundable deposit will be treated or accessible to tax the moment it is converted into monthly rental. So for instance, in this 2020, okay, now is the month of let's say June. Okay, so you plan to move out from the house in the month of end of August. Okay, so end of August, and you know that you have 2 months deposit. So what do you tell to your landlord? Okay, you tell your landlord, okay, I plan to move out at the end of August. Therefore, my 2 months deposit will be converted, okay, for 2 months of my monthly rental, which is July and August. So the moment it is being converted into monthly rental, then only that amount of rental will be taxed under section 40. Okay, so that is the meaning of the treatment of a deposit, refundable deposit. So in general, in the beginning when it is still deposit, it is not taxable, but the moment it is converted into monthly rental, then only it is taxable. Okay. Alright, since you maintain house, properties and so on, in the case of rental income, talking about deductibility of the expenses, you would have a long list of the expenses that can be deducted. Okay, so the list is actually given on page 178 of your textbook, para 6.0. So this is talking about expenses that can be deducted, whereas on para 6.1, page 178 is actually talking about expenses that are not allowable or prohibited to be deducted in accordance to section 39. So if you can see there, under what are the expenses that can be deducted? Okay, number one, cost of repairs and maintenance of the property. Of course, when you have assets, when you have properties, there are lots of maintenance to be done. So whatever maintenance cost that you incurred during that year, okay, can be deducted. Okay, can be deducted against your rental income. And then insurance premium, of course, when you have asset, okay, to cover the risk exposure from having the assets, you would actually acquire insurance. So any amount of insurance premium on fire or burglary will be deductible. Cost of supervision and rental collection. Okay, this is actually when you pay an agent. Okay, you are so lazy to look after your tenant and so on, so you appoint an agent to handle all those rental collection, maintenance, so on. So this cost of supervision and rental collection also will be deductible. Cost of obtaining tenant to replace old tenant. Okay, this is actually referred to subsequent tenant. Okay, subsequent tenant, because normally you have to do marketing, you have to do promotion. Okay, that means now the house is vacant, so you are looking for another tenant and so on. So all those activity, of course, you incur cost, isn't it? Therefore, that cost for subsequent tenant is actually deductible. And then the next one is interest paid on loan facility taken to finance property. Of course, if you don't have a lot of cash, in order to buy property, you go and take a loan. Okay, and of course, every month you pay the loan for the loan facility. So, what is the portion that can be deducted? Is only interest portion. Okay, the principal portion is not deductible. Only the interest portion of the loan facility. Next one is cost of renewing rental agreement and other miscellaneous expenses. Okay, so normally in the case of when you rental out something, you would have an agreement, okay, between tenant and also landlord. And so of course sometimes you need to appoint lawyer, you need to pay the stamp duty and so on. So anything expenses related to settle the or to prepare the rental agreement can be deducted. And then the next one is quick grant and assessment. So what is this? This is actually your cukai tanah, cukai pintu. Okay, the one that you pay to your council on yearly basis. Okay, and then security services, because sometimes for condo you have guards, maintenance expenses, isn't it? That also can be deducted. And repainting of the rented premises. So any repainting costs related also can be deductible. So in general, under section 33, whatever expenses that you incurred wholly and exclusively to generate that rental income can be deductible. So what are the expenses that cannot be deducted? Expenses that cannot be deducted is actually explained under 6.1. So most of the time, expenses which are not allowable are cost of obtaining the first tenant. So in tax, normally initial expenses is actually not allowable. Okay, why initial? Why do they call it initial? That means now you have a brand new condo. Okay, so you want to get your first tenant. Of course, you have to do marketing and so on, isn't it? But since you do promotion for first tenant, so all these related costs is not deductible. Okay, advertising, commission, legal expenses for the first rental agreement is not allowed. Okay, because it is considered as a capital in nature. So that is the basis that used by income tax. Okay, in the case of temporary of non-occupation, 6.2, they mentioned that because sometimes throughout the 12 months of the calendar year, your premises might be used or by tenant only for 10 years, 10 months. Okay, so the other 2 months you have no tenant. But of course, you might have incurred your expenses. So can it be deducted? So in this case, yes, okay, whatever expenses incurred during the non-occupation period, okay, will continue to be deductible. Okay, that means regardless whether you have generate income, there is a gap in income generation of the rental income. As long as you incur the expenses in that particular year, therefore it can be claimed as a deductions. Okay, for instance, like maintenance. Of course, sometimes you do maintenance or repainting before the new tenant move in. Okay, so for that month, when you do all this maintenance, repairing work, and so on, of course, there is no rental income, isn't it? But you incur expenses. So these expenses can be deducted for that particular year of assessment. Okay. So in this case, with regard to the rental income, there are possibility that your expenses is greater than your income. Okay, so let's say you have rental income for that year 10,000. However, because you incur a lot of repairs and maintenance, about 12,000. Okay, so 10,000 minus 12,000, you have excess of expenses of 2,000. So this one is what we call considered as a rental loss, which will be permanent loss. Okay, why permanent loss? Because this loss is there, cannot be set off against any other income. Okay, that means any loss that you incurred from rental income cannot be used to set off against your income in employment income if you have any. Okay, so that's what it means by rental loss, which is treated as a permanent loss. Alright, so if you want to have a clear picture of how to compute rental income, you can actually refer to example 10.5, page 179 of your textbook. So in that example, basically they have quite a comprehensive example. What types of income or receipt amount that landlord received during that year, and what kind of expenses incurred by the landlord during that year. Okay, so later on they show you the computation of adjusted rental income. So which income is actually accessible for tax, and which are the expenses that allow for deductible expenses. So you can go through that example, which they also give explanation why that income is taxable or why that income is not taxable, and why that expenses is deductible, or when that expenses is not deductible and why. Okay, so that is with regard to the deductibility of the expenses under rental income. So in rental income, you will have quite a number of expenses, deductible expenses that you need to remember. Okay, last but not least, on page 181, okay, they actually show the distinction of rental income. Why is it good for rental income to be business income instead of rental income under section 40? Okay, so because actually later on when you learn about business, there are some beauty that why people would actually prefer to have business income. Okay, all right. That is with regard to rental income. So now let's move on to section 4D, royalty income. Okay, what is actually royalty income? Okay, royalty income is actually defined as any sum paid as consideration. Okay, consideration for what? For publication, or for the use, or for the right to use. Okay, so publication of what? Use what? Right to use of what? Okay, because sometimes you might want to use certain copyright, you might want to use certain artistic or scientific works, patterns, design, model, plan, or maybe you want to use certain secret processes, okay, or trademark, for instance. Okay, so let's say you want to produce t-shirt. Okay, you want to put Upin Ipin on your t-shirt, therefore you need to use the pattern or trademark of Upin Ipin from Les Kopak. So you have to pay Les Kopak certain amount of money, so that is actually considered as a royalty. Okay, and sometimes also you pay certain amount of consideration for using the know-how. Right, for instance, like consultant. Okay, you want people to draw a plan for you. Okay, the blueprint for you. So you pay for the know-how, you pay for the skill, you pay for the experience. So when whoever receives this kind of consideration is actually considered as a payment of royalty to that particular person. Okay. So the derivation is actually depends on where you receive or you derive your royalty income, and you might also receive royalty income in Malaysia from outside Malaysia, okay, on certain circumstances. Okay, the basis here or the basis of assessment still again similar. For individual, it actually depends on calendar year. So meaning during that calendar year, did you receive other sources of income? For instance, like dividend, interest, Okay, so that's why in the question you have your cut-off period. For YA 2019, you're talking about income that you receive in between 1st January until 31st December 2020. Okay, and then of course for business you follow financial year. In case of royalty, most of the time not so much of deductibility, deductible expenses that you need to memorize, but in general we follow the normal rules, which is section 33 talking about wholly and exclusively incurred to generate business income. Section 39 is talking about prohibited expenses. Okay, so we actually follow that basis in order to know whether that expenses is actually deductible or not deductible. Okay, in the case of royalty, most of the time royalty will be exempted at certain value. Depends on the category of the or type of royalty. Okay, so the list of the exemption given for royalty is actually stipulated in Schedule 6 of the ITA, alright, under paragraph 32. 32 capital A, capital B, capital C, capital D, and capital E. So of course, specific para mentioned about specific category of royalty. Alright, so let's look at textbook on page 185. Okay, page 185, which talking about royalty of that you receive under category of para 32, 32 capital A, and 32 capital B. Okay, so here is actually talking about consideration that being paid for the publication or the use of artistic work, okay, other than original painting. Alright, okay, sometimes when you borrow certain statue, okay, you do certain statue and people pay you royalty for the statue that you do. Okay, because sometimes what happens is that you are an artist, you do whatever your statue and then you give to the arts gallery. Okay, so for them to display in the gallery, they pay you certain amount of royalty, okay, to you. So in this case, you receive royalty from your artistic work. Okay, consideration for the use of your artistic work. So they pay you 10,000. Okay, they pay you 10,000, or maybe you do some recording. Your voice is very good, therefore you do a recording single. Okay, single on your own after you become so famous in the YouTube. Alright, so the recording music company is actually paying you certain amount of royalty when people start buying your music or your single. Okay, so here is mentioned that whatever amount that you receive, you get exemption of 10,000. Okay, so if you have this category of royalty, whatever amount that you receive, you will get exemption of 10,000. So amount received minus 10,000. So the net amount is the one that will be taxed under royalty income. Okay. Para 32 capital A is actually talking about translation work. Okay, because sometimes some people, they are very good in translation because their language is very strong. Maybe you translate from Korea into Bahasa Melayu, and then or perhaps from Bahasa Melayu into Chinese language or into Arabic. So whatever translation work that you do, okay, at the request of Ministry of Education, Ministry of Higher Education, or AG chambers. So in this case, okay, so translation is actually made based on request. So whatever amount that they pay to you, you will get exemption 12,000. Okay, and then on para 32 capital B is actually talking about the right to use or publication of literary work or original painting. So this one is actually referred to your painting. Okay, you are very good, you are very artistic, so you like to paint and so on. And then you sell. Okay, because nowadays some students also they are very good at arts, calligraphy arts. So they during PKP they draw the calligraphy arts and they sell. Okay, or they display whatever, so they get royalty payment. So for this one, you get exemption of 20,000. Okay, para 32C is actually talking about income of an individual resident in the basis year with regard to the performance of cultural performance approved by the minister. Okay, so this is, for instance, you do cultural show, okay, in the uh, budaya or cultural house, okay, beside the arts gallery in Kuala Lumpur in front of the IJN. You have one, okay, rumah budaya, istana budaya, alright. So whenever you do your cultural performance and you get royalty payment there, so here is actually where you get exemption, okay, where you get exemption. And then the next one is para 32 capital D. This is actually referred to musical composition. Okay, composition. So this is actually when you are very good in composing a song, for instance. So when you compose a song and then people pay you, so you will have exemption of 20,000. Okay, so this is so para 32 capital D is actually referred to musical composition, and then para 32 capital E is actually referred to honorarium. Okay, honorarium here is actually referred to income that received by individual by the way of fee or honorarium in respect of services provided for the purpose of validation, moderation, and accreditation of franchise educational programs in higher educational institution. Okay, or anything that which is verified by Lembaga Akreditasi Negara or MQA. Okay, so the whole amount here is actually exempted. Okay, and then last but not least, scientific research. Okay, so scientific research is actually when sometimes you have your scientific research and then after that you dispose, so you have income from that. So 50% of your statutory income from any scientific research where you commercialize it will get exemption. Okay. So in general, when talking about royalty, you're more concerned which category that royalty fall into, which specific para, and you'll see whether is it partially exempted, meaning you have certain limit on the exemption, or you might get a full tax exemption for that item. Okay, so in general, for other sources of income, that is the four main category of other sources of income that you need to know. Okay, so number one is dividend income. So in general, to recap, dividend income most of the time is exempted. And then you have interest income, again also interest income earned from money deposited in any financial institution, which is most of the time also will be exempted. And then you have rental income. So rental income is where you have a lot of treatment that you have to see when the rental income will be taxed and what are the expenses that can be deducted. Okay, and then last but not least is royalty income. Again, when talking about royalty income, you must most of the time you will get exemption. It's either partial exemption or full exemption depending on the category of the royalty that you receive. Okay, so last but not least, so this is actually the final computation format that you would actually have in your computation. So in the first class this week, I already showed to you how to compute employment income. So that is only the first level or first category of income. Okay, so now you have other sources of income. Therefore, your computation would be further extended. So normally, if you notice, it would actually follow section A, B, C, D. Okay, so you cannot put rental income first, then only you put dividend. Format wise, it is wrong. Okay, because C come first, then only D. So after section 4B, employment income, where you start with the gross employment income minus allowable expenses. Therefore, you have adjusted, which is also known as statutory employment income, because in between adjusted and statutory employment income, there is nothing to be deducted. Okay. And then you also then later on you insert your section 4C, which is dividend. So most of the time, whatever dividend that you receive, that is actually considered as a gross dividend, and normally the whole amount is actually exempted. So you have to show here exemption. And then gross interest, if you have any lower expenses, you deduct. But in most of the time, in most of the cases, interest income that you receive in Malaysia is actually exempted. So again, here you would have exempted. Okay. And then you have rental income. Okay, so rental income and royalty income, when you do your computation, you have to split. You cannot lump sum up. Okay, rental income and royalty income, then only you deduct expenses. Cannot. You have to do one by one. Okay, because it follows matching concept. Any expenses related to rental income will be set off against rental income only. That's why you have to go by specific category of income. So you have to know what are the gross rental income that will be taxable minus any allowable expenses that can be deducted against your gross rental income. Therefore, you will get adjusted and also known as statutory rental income. Then later on you do for royalty. So royalty, normally you take note how much is the gross royalty amount, royalty income that you receive minus any exemption depending on which para. Is it para 32? So depends on the category of royalty income. Okay, so depends on the entitlement of the exemption given in accordance to respective para. And then you might have net or you might have nil. Okay, because sometimes your exemption is greater than your income. Therefore, your adjusted income or statutory income will be nil. Okay, or fully exempted in other words. Alright, so you have all those. So now, if you remember your GASAT format, okay, so now you already have your G, which is your gross, adjusted, and statutory. Okay, and then what happened after that? So once you already have for section 4B adjusted and statutory income for employment, section 4C which is adjusted dividend income if any or adjusted interest income if any, and then you have section 4D adjusted rental income or statutory rental income, adjusted or statutory royalty income. Therefore, you add all your statutory income. Okay, so what you derive? You will derive to aggregate income. So aggregate income, in other words, is a sum of all your statutory adjusted income. Okay, so I repeat, aggregate income. Aggregate means you accumulate, right? So aggregate income is actually accumulation of all your adjusted and statutory income from respective section 4, C, D, E, and F. Okay, so once you have that, so later based on the GASAP format, then later you would have to consider for the current year business loss. So we will explain this later. And then you also have another item which is minus approved donations in accordance to section 44 of the Income Tax Act. So this I will explain later when we want to do the computation. So after aggregate income, therefore you minus so aggregate income minus these two, therefore you derive to your total income. Okay, so that is where your GASAT. Alright, so if you can see, now it has been further extended in terms of your tax computation. Okay, another thing that I would like to highlight here is that, okay, so for the couple, married couple, normally husband and wife. So most of the time nowadays, husband is working, wife is also working. So when we do tax computation, normally we would do it separately. Okay, so for husband, we identify whatever employment income, dividend income, interest income, or rental or royalty income for him. Then we do calculate for him, and then for wife also like that. So at the end of the day, you're going to have two separate total income. So one total income for husband and then another total income for wife. Okay. So we will actually look at this, how to do the computation later on during the tutorial. So I think that's all for this session with regard to what is other sources of income. Okay, so basically we look at the definition of respective other sources of income. We also look at derivation basis. We also look at basis of assessment. We also look at deductible expenses and also exemption given for respective other sources of income. Okay, and I finally recap on the format how it would be look like on the tax computation. All right, so I think that's all for today's for this session with regard to other sources of income. Thank you.